All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Tuesday, everybody. Happy Inflation Day, everybody. Today is August 12th, 2025. The top story this morning, the market is ripping after the Consumer Price Index, or the CPI, came in ever so slightly below expectations. And I do mean ever so slightly. And by some arguably more important measures, it was actually slightly ahead of expectations. But the market trades on the headline number. The headline number was okay. Wasn't great, but it certainly wasn't bad. And really all the market wanted from this CPI report was, don't do anything to mess up my September rate cuts. That was all the market was thinking heading into this. And well, there was nothing in there that was going to mess up the likelihood of a September rate cut from the Federal Reserve. And that's what the market is trading on right now. And you can actually see that in the CME Group's Fed Watch tool. The likelihood of that September rate cut is going up, even though it was already very likely. It is now more likely. And so the market is trading upward on that news. So what was the CPI? It came in headline number 2.7% year over year. That is in line with expectations, down slightly from 2.8% last month. So right there, in line with expectations, inflation coming down. There's everything the market wants right there. On a month-over-month basis, it was 0.2% versus 0.2% expected, and down slightly from 0.3%. So, look, the headline number, so far so good. Year over year, it's down. Month over month, it's down. Now, when you get into the core inflation numbers, this is where we actually got to stop and we got to look a little bit. All right, core inflation, 3.1% year over year. Market was expecting 3.0, and that is a jump up from 2.9. So, okay, core inflation heading in the wrong direction there. And it's heading in the wrong direction by two steps there. That's not so good. That's not really what you want here. On a month-over-month basis, 0.3%. That was in line with expectations, but it was up from 0.2. So look, the market is trading on the headline number right now. The headline number was good. It's going down. But beneath that, if you pull back the curtain on that, the core number, not so encouraging. So now what's the big increase? The increase was driven by used cars, by transportation services, and by new vehicles. Those are the things that are getting more expensive, or they're going up faster than they were last month. The decreases we're seeing in energy and shelter. Energy is nothing new. Gas prices have been going down as OPEC has been increasing production. That should continue into the future. U.S. producers are also making more fuel than they used to. Now, look, let's talk about the shelter index for a second here. And again, guys, hey, this is government statistics, right? We talk all about government statistics and their flaws on this channel. Case in point, E.J. Antoni was just appointed the new head of the BLS. He's going to be the new BLS commissioner. He's a conservative from the Heritage Foundation. A lot of people are like, oh, my God, he's a Trump sycophant. We'll see. I'm going to give the guy the benefit of the doubt. E.J. Antoni, he's one of the guys who's been saying the economy has been in a recession since 2022, which I agree with. But he's the new BLS guy. So we got a new head at the BLS. We got good numbers here, or bad numbers, depending how you look at it. All right, let's take all this with a grain of salt. The shelter numbers, though, that you got to look at, because shelter came in lower, 0.2% for the month. And most of the gains in CPI for the last year have been in the shelter index. And within the shelter index, owner's equivalent rent, that's a statistic I've complained about over and over again on this channel. It's a very unscientific, very inaccurate number. They call people up and say, what would you rent your house out for unfurnished right now? And people just spout off a number. And that's what they report as housing inflation. And that single statistic counts for more than a quarter of all the weight in CPI, by far the heaviest weighted statistic in the index. Now, that number, in my opinion, in 2022 and 2021, I think that number was artificially low. I think it wasn't accurately reflecting what the inflation rate should have been during those years. Look at what housing prices were doing in 21 and 22. No, they were going up way faster than the rate that the BLS was reporting in owner's equivalent rent. Now, here you converse that. you could make the case that this number is now artificially high. If you think about it, home prices have been going sideways, if anything, down for the last year. Largely, the housing market has been frozen. And yet the largest contributor to the increases in CPI has been the shelter index. Does the index really match the experience on the ground? I know there's going to be a lot of people who say, well, my rent went up last year, my rent went up this year. I get it. I'm not saying your rent isn't going up. That's largely because of increases in the value of the home that happened the year before that. And so you're kind of like left to wonder here, is the CPI instrumentation really accurately reflecting what's going on in the economy? In my opinion, right now, the CPI should arguably be coming in lower because that shelter inflation isn't as bad as it looks now, because it was much worse than it looked back then. Either way, the market is just trading on this headline number saying more rate cuts in September. And so, hey, number go up. That is the takeaway here this morning. Now, we've also got a lot of tariff and export control news. The Chinese are urging their companies not to use NVIDIA's H20 GPU. That's the one that the government just told them, hey, yeah, go ahead, sell that to China as long as you give us 15% of the revenue. The legal basis for that just boggles the mind. I don't really know how they pulled that one off, but hey, that's what it is. That's the deal that they cut. So the NVIDIA is going to give 15% of revenue to the government. Now China's like, you know what? We don't want it because we're worried the United States is going to backdoor the chips. The Chinese have been backdooring every piece of electronics they sold into the U.S. economy, but that's neither here nor there. Chinese firms are under pressure from the government to not buy them. And again, the government in China, they don't really make suggestions, do they? They kind of suggest at gunpoint. So we'll see if that takes a chunk out of NVIDIA's H20 sales now that they've finally been opened up. And in the same, within the same hour, we got a news that this morning that Trump is signaling he's open to allowing a neutered version of the Blackwell chip. That's the latest version, right? The H20, that's the old Hopper, the previous generation of NVIDIA GPUs. Now they're talking about, I don't know, a B20, I guess, if you will, a neutered version of the Blackwell. Again, I'm sure that same 15% revenue number is going to apply there as well. And we got more tariff news. President Trump has extended the deadline to reach a trade deal with the Chinese by 90 days. That is after saying there would be no extension to the previous 90-day extension. So you could argue there is your taco trade again. So we got another 90 days of wondering what the tariffs are going to be on China. That's wonderful. We got earnings from Circle today. That was an interesting story. Circle reported a big jump in their revenues, 53% increase year over year because of mass adoption of stable coins. Circle is the maker of the USDC stablecoin. And yet, despite that big jump in revenue, they took a big $400 million hit to their earnings because of all the expenses associated with their IPO. But that stock is ripping this morning on those revenue numbers. We've got Evergrande is back in the news today. There's a name we haven't heard in a couple of days. And Chinese car companies are falling short of their pledge to pay their suppliers within 60 days. We've been talking an awful lot about how Chinese EVs are taking over the world. They're selling them all into Europe. Everybody's putting tariffs on the EVs to try to slow these cheap electric vehicles. Well, maybe the reason China can make them so cheap is because they don't pay the people who supply their parts. Well, that might be a problem for you. Only 3 companies have met the pledge to pay within 60 days. That leaves a lot that aren't. Guys, we got a lot to talk about today. Let's get into those inflation numbers and let's shrink my big melon of a head and see what's going on in the market today. And hey, don't forget that like button and that subscribe button for the YouTube algorithm if you're new here, because we do this one every day. And you can see here, guys, the S&P 500, it really liked that CPI report. As soon as that hit the tape, stocks started going up. We've got the S&P is higher by 28 points ahead of the opening bell. That is just shy of 0.5%. We did give back a little bit of those gains in the last 10, 15 minutes here, just since I went live. But I suspect we're going to keep heading higher from here. The Dow is up by about 197 points, 0.45%. Again, most of that coming in the few minutes after the CPI release. And the NASDAQ is leading the way higher by 0.49%, 114 points to the upside ahead of the open. So stocks are up pretty much across the board here. Why? Because Fed cut sooner. Meanwhile, we've got a slightly weaker dollar. The DXY is down 16 basis points. All of that coming on the CPI report. Again, the weaker dollar, that is the market expecting the Fed to cut in September now. And looking over at the bond market, we've got mostly red on the short end, but pay attention, we still got a little bit of green on the long end. Just a reminder, guys, the Federal Reserve does not control the long end of the yield curve. Right now, the 30-year Treasury, 4.851. That is higher by 1 basis point. The 10-year, however, is down by a fraction of a point at 4.282. The 2 years at 3.737. That's down by 1 point and change, almost 2 points. And the 1 month is at 4.336, down by almost 1 basis point. Looking over at the commodities board this morning, we got kind of a mixed bag in commodities here. Gold is higher by $1, $3,343, higher by a 0.03%. That's after getting clobbered yesterday. But I would note, guys, here that front month gold contract there for December, 3,391. That's actually down by $13. So we're still seeing that gap, that exchange for physical trade, the difference between the prices in New York and London. They're still all over the place here because of the tariff story. By the way, we got confirmation yesterday that the gold tariffs are not happening. Meanwhile, we've got spot silver is higher by about 9 cents here, $37.71. That's about 0.23% higher for spot silver. I like the shiny. We've got copper is up by 1.55%. Platinum is down 0.5%. Palladium is down by 1.5%. And crude oil is down by about 0.75%, $63.46 a barrel for September WTI crude futures. Looking over at Bitcoin, we're kind of still where we were yesterday morning, $119,010 as priced on Coinbase. Look, that put in an ugly candle yesterday. I just want to show you here when we went overnight to 122,000, ended up closing down on the day. That was a pretty ugly candle yesterday. We're still kind of sitting here right in that range. So Bitcoin is struggling with that 120,000 ceiling for the time being. Now, let's take a look at our inflation numbers right now. Here's the big one. This is the number everybody cares about, the headline year-over-year number. You can see that 2.7% down from, it looks like they downwardly revised the June number a little bit too to 2.7%. That was previously reported as 2.8. So look, inflation, it stopped going up in June and July, I should say. It's no longer accelerating to the upside, still above the Fed's 2% target, though, and we haven't hit that 2% target in many moons. Looking over at the monthly number, again, this is a number the market is celebrating a little bit here, 0.3% down. 0.2% for July, down slightly from the 0.3% and in line with expectations. So the headline numbers, that is what's giving the big signal to the market this morning. But these core numbers are a little worrisome here. I think maybe once the market settles down a little bit and they take a look at these, they might start to realize they're getting a little ahead of themselves. But this core inflation rate year over year at 3.1%, that is a quite significant step change from the 2.9% we had last month. And that number was higher than 3 consecutive 2.8% prints. So core inflation, possibly we're seeing a little bit of tariffs show up here. Emphasis a little. It's not a lot, all right? We're not getting the big jump up in inflation that a lot of people were expecting with the tariffs. But those core numbers, if you take out food and energy, they are still heading higher. But again, within that number, those core numbers includes the shelter index, which I think is by itself artificially high right now. And on a month-over-month basis, you've got core inflation hit 0.3%, higher than the 0.2% we got in June. So again, core a little high, but the headline a little low. Market prefers the headline. Here's the actual grid in the CPI report showing your numbers here. There's your 2.7% year-over-year number. There's your 0.2% month-over-month right next to it. Some interesting things here. The food index, unchanged for the month of July. Food did not get more expensive in July. Still up 2.9% year-over-year, but on a monthly basis, it didn't move. That's encouraging. Food at home, that's the grocery store. That was actually down for the month of July, negative 0.1%, barely a rounding error there. Food away from home, that's your restaurants. That continues to tick up, though, 0.3% higher and 3.9% year over year. So eating out is still getting more expensive for folks. The energy index came in negative 1.6% year over year and negative 1.1% for the month. So most of the decline in the index is going to show up there. That's your cheaper energy commodities, down 9% year over year, led by a 9.5% year over year decline in gasoline prices. So that's the one that's driving your energy index deeply negative. I would add electricity here did not go up this month, negative 0.1%. That's the first time in a couple of months we didn't see any big changes to our electricity numbers. Then you've got your core number, your 3.1% year over year and 0.3% month over month. That's when you strip out food and energy. In that category, new vehicles unchanged on the month. All right, we've been seeing some negative numbers for new vehicles the last 2 months. They were flat for the month of July, still up about 0.4% for the year. Let's see, what else do we have? Used cars and trucks, they swung from a negative to a positive this month. They were negative 0.7% in June, and they were negative for the 3 months before that as well. So we had 4 consecutive numbers of more affordable used cars. That stopped in July. They were up by 0.5%. Arguably, the tariffs on new vehicles may have driven some shoppers towards used vehicles. That's still up 4.8% for the year. We got apparel went up by 0.1%, down a little bit year over year. Let's see, services, less energy, they went up about 3.6%. Within that number, the shelter index, 3.7% year over year. Again, that's a quarter of the index. Actually, the shelter index is about a third of the overall index. Within that, owner's equivalent rent makes out a quarter. But still, that is skewing the entire index higher, that 3.7% shelter number. And we are starting to see on a month-over-month basis, those shelter numbers are coming down 0.2% for 2 months in a row now. But again, is that really accurate? Is the housing market still getting more expensive? Is it really? I don't think so. I think the housing market is frozen. If anything, home prices are coming down a little bit. We are seeing price cuts. When you look at Zillow, when you look at Redfin, homes have been listed for longer. Sellers outnumber buyers dramatically. I really don't think these shelter numbers are accurate here. But again, because it's so delayed, it takes so long for the signals to filter through, it's artificially skewing this number higher. And one other thing that was noteworthy, we had a big jump in transportation services inflation for the month of July, 0.8%. The 2 biggest inputs to those are basically plane tickets, and auto insurance. I don't think plane tickets got much more expensive last month. We're actually seeing a lot of articles about airlines are struggling here because people aren't flying. There was actually an article about a going concern at Spirit Airlines today, even though that company is only 5 months out of bankruptcy, they're still having problems. So it looks like auto insurance may be the big driver there with the transportation services number at 0.8%. That's up from 0.2% the prior month. All right, now let's look at the Fed watch tool at what's the likelihood of the rate cuts. Here's where we are right now. Let's refresh this, get an accurate mark here. We are at a 94.2% likelihood that the Fed cuts in September. You can see it there, that big bar. Virtually no chance that they don't cut here. Now, just before the CPI report was released, this is what that chart looked like. We were at an 82% chance. So you can see here the likelihood of that Fed cut has gone up rather significantly there, although it was already pretty much a likelihood. Now the market is looking at it like a sure thing. Also, let's take a look at the December Fed watch tool. Right now, the market is saying a 53% chance that we end up at 350 to 375. Now, that's the market actually pricing in, what would that be? 3 rate cuts between now and December. That is somewhat changed. Before we went into this, let's see, what were we in December? Before CPI came out, the market was actually saying just a 42% chance of 3 rate cuts in December. Now we are 50 and change. So again, you can see the market is pricing in a slightly more dovish Fed here. Stocks like that, lower interest rates, more easy money, that sends asset prices higher. All right, that's the inflation story for today. Now we got this one. This is the guy who's going to report the inflation going forward. Trump names Heritage's E.J. Antoni to lead the Bureau of Labor Statistics. This is the new inflation and jobs number guy. He's going to replace the lady who was fired last week because the jobs report was revised downward basically by 900%. President Donald Trump named E.J. Antoni, the chief economist of the Conservative Heritage Foundation, to lead the Bureau of Labor Statistics after firing the former head of the agency earlier this month. Trump appointed Antoni, who has been vocal about his concerns with BLS jobs data and revisions, in a Truth Social post on Monday. The position is subject to Senate confirmation, so he's not on the job yet. Our economy is booming, and EJ will ensure that the numbers released are honest and accurate, Trump wrote. And Tony didn't immediately respond to a request for comment after the announcement. So, look, just that quote right there, Trump saying our economy is booming and this guy's going to make sure the numbers released are honest and accurate. Well, the first half of that sentence doesn't really match the second half, right? Our economy is booming, and so I'm putting this guy in the position who is going to report the numbers that say the economy is booming. Is that what you're saying? Or is he going to release honest and accurate numbers? It's important. Now, look, E.J. Antoni has been an outspoken critic of some of this data, especially some of the GDP data. He's been adamant on FinTwit for years that the U.S. has been in a recession since 2022. And I think for 90% of the population, that is an accurate statement. If it wasn't for this AI bubble and if it wasn't for 6% of GDP deficits, yeah, we would actually be in a massive recession right now. So the question is, will E.J. Antoni maintain that current dialogue? Will he just report accurate information, or is he going to say what Trump wants him to say? Everything is great. We just don't know yet. Antoni has a PhD in economics. He's a senior fellow at Unleash Prosperity, a group that counts Steve Forbes, Art Laffer, and Stephen Moore among its leaders, and is one of the entities regularly bringing policy ideas to Trump. He is going to be the new government statistics guy. Let's give him the benefit of the doubt. But again, these numbers are just too damn important to be subject to the infectious stink of politics. And I think this is not a new thing. I think these numbers have been infected by politics for a long time. Is E.J. Antoni going to fix it? I hope so. I hope he does. All right. Meanwhile, China urges firms to avoid NVIDIA H20 chips after Trump ends the ban. Well, we just cut this deal yesterday. We were just talking about 15% of revenue, and then you can sell your chips to China because magically at 15% of revenue, national security concerns just go up in smoke. They disintegrate. Now Beijing is saying we don't want them. Why don't you guys just tell me what you want? Beijing has urged local companies to avoid using NVIDIA's H20 processors, particularly for government-related purposes, complicating the chip makers' attempts to recoup billions in lost China revenue after the Trump administration reversed an effective U.S. ban on such sales. Over the past few weeks, Chinese authorities have sent notices to a range of firms discouraging use of the less advanced semiconductors, people familiar with the matter said, asking not to be named discussing sensitive information. The guidance was particularly strong against the use of H20s for any government or national security-related work by state enterprises or private companies, the people said. The letters did not, however, constitute an outright ban on H20 use, according to the people. Industry analysts broadly agree that Chinese companies still covet those chips, which perform quite well in certain crucial AI applications. President Donald Trump said Monday that the processor, which he called obsolete, still has a market in the Asian country. So now that the Chinese can finally get them, they're like, oh, I'm not so sure I want them. And then we got this one. Trump open to NVIDIA selling scaled-back Blackwells to China. So now that we're done arguing about the H20 and the Chinese don't want them, let's talk about the B20, or what will probably be named the B20. They haven't actually named it yet. U.S. President Trump signaled on Monday that he'd be open to allowing NVIDIA to sell a scaled-back version of its most advanced AI chip to China. Trump said he would consider a deal that would allow NVIDIA to ship its Blackwell chips to China if the company could design it to be less advanced. It's possible I'd make a deal on a somewhat enhanced, in a negative way, Blackwell processor, he said in a briefing with reporters. In other words, take 30, 50% off of it. By 30 to 50% off, he's talking about an arbitrary reduction in some unnamed capability. We don't know what that even means. And of course, I'm sure that 15% fee for services rendered from the government will also apply. I hate this story. Let me just tell you, this whole export controls thing with the AI chips, I hate this story. Why do we even argue about this? Because NVIDIA has been totally ignoring the export restrictions anyway and selling everything they want to the Chinese, as evidenced by the mountain of proof that people swear doesn't exist, even though it's been sitting on their faces for a year. Whatever, guys. NVIDIA stock, it is down about 0.15% ahead of the open here. $181.87 for NVIDIA. Meanwhile, we got a 90-day extension after saying there would be no 90-day extension. Trump extends trade truce with China. Here's what it means for tariffs. President Trump has extended a key tariff deadline with China for another 90 days, meaning high levies on imported goods won't snap back into effect on Tuesday. The 90-day extension was first reported by the Wall Street Journal and CNBC after Trump earlier today sounded optimistic, though not convinced, that a deal to extend it was in the offing. We've been dealing very nicely with China, Trump told reporters at the White House. He said he and President Xi Jinping had a very good relationship, but wasn't willing to say if a deal was done or not. We'll see what happens, Trump says. Trump signed the executive order extending the deadline on Monday night. So 90 more days of wondering what the tariffs would be. If certainty was what you were hoping for, well, you're just going to have to wait for that one. Meanwhile, Circle shares rise as second quarter revenue jumps 53% on strong stablecoin growth. USDC adoption appears to be increasing. Circle Internet Group shares jumped Tuesday after reporting its first quarterly earnings as a publicly listed company, while charges related to the stablecoin issuer's debut contributed to a second quarter loss. It's reported a 53% increase in revenue driven by strong growth in stablecoins. Revenue rose to $658.1 million from $430 million in the same period a year ago. Shares of the stock rose more than 7% in pre-market trading. Circulation of USDC, the stablecoin Circle issues and manages, grew 90% from the previous year to $61.3 billion. Circle also said it swung to a net loss of $482.1 million or $4.48 a share from earnings of $32.9 million or break even a share a year ago. The net loss included non-cash IPO-related charges of $424 million for stock-based compensation and $167 million to adjust the fair value of its convertible debt. So the company's not making money. You know, they ton of revenue, but cost them a lot of money to IPO. And of course, they're giving all their executives a whole bunch of shares as they IPO. So that's wiping out the company's earnings. That being said, it's been a good morning for USDC. Good morning for Circle shares. That company is up 13.8% now 14%. It is ripping here. $184 and rising for Circle. Market likes that big jump in revenue. And we've got Evergrande is back in the news. Remember that one? Evergrande stock to delist in China as the property crisis milestone. Yeah, they're out of here. I mean, this company's been dead for years, but for some reason it was still listed. China Evergrande Group has said its Hong Kong stock will be delisted, marking the end of an era for the former high-flying developer whose demise came to symbolize the country's property bust. The Guangzhou-based company said the stock exchange listing committee has decided to cancel its listing, according to a filing in the Hong Kong bourse on Tuesday. The shares will be removed on August 25th. Evergrande's collapse was by far the biggest in a crisis that dragged down China's economic growth and led to a record spate of distress among builders. The company, which first defaulted on a dollar bond in December 2021, was once the country's largest developer by sales and was worth more than $50 billion at its 2017 peak. Well, now he's dead, Jim. These guys were ordered to liquidate more than a year ago. They're finally delisting the stock. That is one bubble that popped a few years ago, and they still have not allowed the price discovery. Now let's talk about the other bubble that's currently kind of popping. China's car makers fall short on pledge to pay suppliers faster. Yep, they forgot to pay their part suppliers once again. Just 3 of China's major automakers have met a pledge to pay suppliers within 60 days, underscoring the challenges of maintaining cash flow and overhauling business practices prompted by a long-running price war. State-owned manufacturers China FAW Group and Guangzhou Automobile Group, as well as Chongqing-based Series Group, have implemented a 60-day turnaround for their bills, according to a report by state broadcaster CCTV on Monday. GAC has made 95% of its payments in cash. The three companies will act as an example for other car makers, apparently. That's according to the Ministry of Industry and Information Technology. China has stepped up scrutiny of what it calls unhealthy competition in the auto sector as a years-long price war sees mounting bills for car makers and extended payment cycles for suppliers, with some stretching more than 100 days. In early June, 17 manufacturers pledged to keep the payment turnaround to within 60 days. Well, here we are a few months later, and only 3 of them have kept with that pledge. And, well, it's easy to sell cheap cars when you don't have to pay for your parts. But sooner or later, if you keep doing that, you won't have any parts to sell. That is kind of how that works. Chinese need to start paying their suppliers here. And this is just the next bubble, guys. I mean, you had the property bubble is bursting. They still haven't allowed any price discovery from that. And now we're on to our next one, the EV bubble and the excess capacity bubble in China, because there are just a ton of factories and production that now that this trade war is happening and the U.S. is decoupling from China, they're just not going to need that much production. And we'll see what they do with it. Anyways, guys, I just want to say thank you very much to the Pasta Man. What's going on, Nashville? He says, Evergrande, I've seen worse. He's only mostly dead. If he's totally dead, there's only one thing to do. Check the pockets for loose change. All right? Are you trying to movie quote me there? Yeah. Billy Crystal, one of his best roles. Have fun storming the castle. Thank you very much, Pasta Man, for supporting the channel, sir. I appreciate that very much. And, yeah, Evergrande, I mean, they were ordered to liquidate a year ago. I don't even know if they've actually sold off their assets. I mean, the court ordered the liquidation, but I haven't seen any articles about big Evergrande developments actually being sold. I don't know. Maybe the press will follow up on that at some point. But if you guys have seen anything about that, about like any Evergrande developments or big Evergrande assets actually being sold off and the company and their creditors actually getting any money for it, send that to me. Well, you guys, you can DM me on Twitter at JG_Nuke, or you can, if you prove you're not a robot, my email is listed on the YouTube channel. You guys can reach out to me that way. But I have not heard one word about any Evergrande assets actually getting liquidated and any money getting raised, which means there is still no price discovery in the Chinese market. Thank you very much, Pasta Man. I appreciate the super chat and the support of the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. Hey, don't forget that like button and that subscribe button on the way out for you new guys. Also, thank you very much to my magnanimous Melonheads on Patreon and YouTube. You guys rock. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till tomorrow. Live small and dream big.